Hello, this is Rich Posson for the Critical Point podcast, and we want to talk about the cocoa. The cocoa market that was showing a monthly nearby chart with long-term business cycles that are part of the model. And what we want to look at is there was a 9-year business cycle low back around 2013. You could take it back into 2012 actually, and then what the 9-year cycle does is in commodities, it relates to like only a 1 to 5 year bull market. Now, if you average them out over many decades, even centuries, if you have that kind of data, you'll probably come up with closer to 5 to 7 year bull market on average. But when you dig deeper inside, you find they don't normally last that long. And that's typical for most commodities. And the reason is when we get bull markets in commodities, they're usually straight up. They're a huge amount. And I'm talking major long-term bull markets. There's some shock to supply usually, and you already have strong demand, and then the demand just panics, okay? I'm not talking about the bull markets that we get on a seasonal basis every year or even every 2 or 3 years, okay? Now, the thing is, most commodities will then spend most of the time in the 9-year cycle as working lower. Now, if you take that same cycle and compare it to the economy, you actually find the economy stays up longer, is stronger, more sustainable, and the economy grows for about 7 to 12 years, and then you have a recession for 1 to 3 years. And that recession can certainly impact commodities, but sometimes you find statistically price didn't change much more than a micro bear market within that commodity, meaning did the recession really cause that? And if it did, it didn't cause any more damage than just having too much supply at harvest time or something. So recessions don't always have to impact commodities in a major way. But likewise, the commodities don't have to follow the economy for 7 to 12 years of growth, so, an uptrend. Now, so what we then believe is that there's a 9-year cycle top probably in the 2015 time frame. So this would suggest that cocoa should actually be in a bear market into a bottom perhaps 5 to 7 years away from now. So it is easy for cocoa to revisit 2000 and maybe even 1500 as we zoom out and look at some of the pricing possibilities. However, you could argue that just really means range trade, that the 9-year cycle really doesn't have a lot to offer here. Now, it subdivides into 3-year cycles. You can even come up with a 5 to 7 year cycle, or which I call a 6-year cycle to simplify it. So this would be an example of a 5 to 7 year cycle. 2 3-year cycles. The interesting 5 to 7 years does show up in climate data and crop impact data, and there's people have done that kind of research in prior decades. I mean, even 50 years ago, there were people talking of a 5 to 7 year cycle in commodities as well as in weather, and it primarily related to the crop side. Interesting enough, however, I find that 5 to 7 year cycle does show up in macroeconomic data, so it can be entirely the economy and business, doesn't have to link just to climate or weather. At any rate, what we believe is subdivided into 3-year cycles, which is the kitchen business cycle, or actually it's just something similar to it. And we can see we had a strange event here when the 3-year cycle should have done this, and yet we got this pop. Well, chances are the 3-year cycle probably occurred August 2019, and we're in a bull market now into 2022. It's also possible cocoa would just slam higher here in the next few months, put in a 3-year cycle top, and then just range trade and be down for a while, that we haven't got this quite right for timing. At the moment, the best scenario is there's a good chance that the virus recession that impacted all these commodities and the stock market, financial markets, it caught this 3-year cycle at the minimum requirement, minimum time, minimum substructure, waves of buying and selling, waves of supply and demand. So it's interesting that it works, okay, that it met a chance for a 3-year cycle top. So we're saying that's devastating enough to say it occurred, but it's immediately going into a bottom. And so as long as we don't see a violation of March 2020 low at 2183 for this particular chart, we assume we're in a bull market until 2022. And we think this is the latest. Now, as a backup, it may have bottomed just a little bit lower at 2165. And as of August 2019, doesn't really change anything. I guess what we're trying to say is if it violates the March low, we want to be cautious here that it may be a sign of more bearish for quite some time, but that doesn't necessarily mean down, down, down all throughout that time. It may just mean range trade and headwinds, and it's just difficult to rally, and we may have to wait to late 2021 to 2022 to get any sign of rallying into that long-term top. So I definitely want to emphasize that these long-term cycles probably don't offer a lot, that this is just a trader's market during the year, and this can last for a few to several years yet. So I would kind of dial in support at 2,000 on down to, say, 1,700. I'd dial in resistance getting up near 3,000 and just assume this is going to range trade for quite some time. And if you can take these cyclical points and these trends, overlay some supply and demand, see if you find a correlation here, it might give us a clue what's going to develop over time on the fundamental side. Now let's zoom in for the smaller trends, but important trends during the year that can be used for trading. So this is the July contract by itself, because sometimes the continuous charts, the more short-term you go, you can run into some complications and not get the true story from it. And since we all trade only the individual contracts, it just seems like all analysis eventually has to convert to just the individual contracts. Okay, so at any rate, we have the standard level 1, level 2 trends we see in all commodities, stock market, even though they all, different markets can have slightly different definitions and different characteristics of how those trends behave, okay? At any rate, we believe we had a rare occurrence of 3 L2 business cycle lows, meaning demand was at its lowest level, but troughing, meaning demand would improve. Supply might back away, or at least available supply in terms of seller interest might back away as demand improves, buyer interest improves. But that is a bit of a rare occurrence. It's like 10% or less probability. If you went with the high probability, you would change this one to a level 1. That would automatically make this level 2, and that would suggest cocoa should collapse back to the low of 2201, ideally still lower, and it should collapse in just the next few weeks into this what's now shown as level 2, but would actually be a level 1 bottom. And the weekly indicator is overbought, starting to roll over. It's losing momentum, suggesting this can be overbought, perhaps even overvalued, suggesting there is a chance for a setback. For the moment, however, because of this virus recession, we think we got something that would explain why we would have a 10% or less probability as the correct sequence, the correct timing, the correct analysis. We're calling this a level 1 bottom with a chance of a late, very late 3-year business cycle bottom. But again, we might be able to put that further back, and it just doesn't matter right at the moment. But it is a little bit of a line to be drawn in the sand, so to speak. At any rate, we could see it is rallying into level 2 top, but it's now late. Ideally, it tops this week for that level 2 trend. Okay, so the level 2 type of buyer, it may be the commercial, it may be funds, it may be speculators, it may be a combination. But level 2 buyers should be thinking, well, I've bought enough for now. I'd actually like to buy a little more lower price. I don't need to keep bidding this higher. I don't need to chase after it. And remember, buyers create tops. They refuse to pay 1 tick higher. The seller can't get it, and the market's over and done with. And you can have just a few sellers that bring a market down. It can bring down a huge market, $1 trillion market, okay? Just with a few sellers. And remember, the fundamental news or S&Ds don't have to show up right at these tops. Most of the time, they actually show up on the way down or on the way up, not at tops and bottoms. Occasionally, you get a surprise report or surprise news that will create a top, but that's generally not the case. So what this is forecasting, we may see a little shift in the bias of fundamentals here or the news cycle to something a little bit negative for cocoa. I'm guessing that we're just going to see some technical trading. We're going to see the buyer interest back away. Seller interest may or may not pick up. And we're just going to pull back prices somewhat. And then it's heading higher into June, July for a level 1 top. And this may have something to do with seasonally that they got to get bought ahead for the year-end holidays. Just a guess, just something to think about. As far as I understand, supply-wise, we got enough cocoa. It looks like we got enough of all commodities, frankly. We have adequate supplies. But that doesn't mean you can't take prices higher with adequate supplies, okay? All you need is the seller saying, well, I want a little more, and I'm comfortable, and I'm backing away, and they tighten the available supply, even though the S&D has not changed and says there's plenty of supply. and the buyer says, well, I got to get it bought, and they wind up bidding higher to get it. Okay. Anyway, we're looking for a little bit of a setback. Now, the thing is, it could be larger and lengthier setback. It doesn't have to bottom the week of June 8th, the latest for July cocoa or cocoa in general. So what's going to happen if we see prices higher next week? I think that would be a warning. It wants to trend higher into summer for that L1 top. The L2 bottom would then be reduced in the amount of decline. You can't rule out a quick little crash or something, but it would likely reduce the amount of downside. It would occur on the way up of the bigger uptrend. So I want to see how this works out. To prove this level 2 right, we'd like to see by next week it's trading below this week's low of 23.41 and maybe even closes down and maybe even turns this weekly indicator down. Now we can also see on the open interest side that we've lost a lot of open interest here. At first we can see this collapse was primarily just liquidation. And now we can see open interest continues to go lower even as the market rallies. So this is really short covering. This is not good demand. I would rank this as a +1. If we had rising open interest, and especially if we get some bullish fundamentals and bullish technicals, I would rank it as a +2 as bullish. Not necessarily strong, could be. So right at the moment, short covering is a sign of some kind of demand and buyer interest, but it's not the best. What it's telling us is the seller really doesn't want to sell lower, but they really don't see, in other words, they think it's too low, but they're not necessarily that concerned of upside yet. They're still following the poor economy news. Now, the point is the entire market might be getting a little brave now, thinking, yeah, but the economy is going to reopen soon. We'll get back to some stability to here in normal markets. So we may soon see this open interest rise. In fact, it even turned up a little as of next week here, and that would show us net new demand returning to the market if prices are also higher. So that's what we've got for cocoa here. Nothing on the very short-term basis here. Just wanted to point out, yeah, it's due for a setback and maybe a slowdown and maybe a struggle. It may actually rally at a slower pace until we get that L2 bottom and then speed higher. Yes, there's a chance for higher later this summer, but the point is we have to be thinking in terms of, is this a buy right here, right now? And all I can say is for passive trend followers, and maybe, but I think you got to be managing risk if it takes out a weekly low and then reevaluate if we can find that level 2, because we might be able to follow a much larger trend higher. As always, manage your risk relative analysis of others. We don't have any upside price objectives for you right now. Support are just weekly lows and the low of the year. Thank you.